Hi everyone. So I want to show you today how to validate the signals and how to use them once you get them on the Discord server. So this pair is AUDJPY and this is the daily time frame on the pair. The signal I want to show you, let's rewind back in time, is this order block. Now, when you get the signal on Discord, you will get information about the higher time frame and the lower time frame. So the Discord signal will tell you that there was a, a higher time frame order block or a fair value gap that was found, and then on the lower time frame, like 1 hour, 30 minutes, etc., it will tell you that there was a breaker found that you could actually go and trade. Definitely, you don't want to be trading this entire order block, as this is a very wide zone. This is obviously is like 100 pips, and obviously you can't have a stop loss of 100 pips. So the way to the you need to you get a lot of signals on Discord, and you need to validate and filter out signals that you don't want to trade. So let me show you how to do that. So when you're evaluating any signal, the first thing that you need to identify is, does the signal look valid to you? Does it look technically correct to you or not? And here I think we don't have any such problems. This is a good fair value. This is a good order block there that we would like to trade. Fair. Let's mark the order block. So the way to mark the order block is the candle that got engulfed. This orange candle, we basically take the high of the candle and we take the lowest point of either of these two candles. So zooming in, you can see that the lowest point is here and the highest point is here, and that becomes our order block. So this is what we are anticipating. Price will come back and mitigate, and then we'll go long from here on the smaller time frame, and I'll show you that in a bit. The next thing you need to validate is to assess that in what range is this order block forming. So the way to do that, and I'll show you in a minute why that is important. The way to do that is basically switch over to line chart and draw a range from the high to the lowest point. Here it seems like the lowest point is over here, and you can see that in this range, let me just switch off everything else, just keep the range. If you look at this range, this was our order block, and when we drew the range, this is the high of the range and this is the bottom of the range. This is equilibrium. Anything that is below equilibrium is called discount. Anything that is above equilibrium is called premium. You only want to be buying in discount and only want to be selling in premium. Said other way, you buy in discount, take it to the premium, and exit in the premium. That's the ideal objective. We can also see that there are 38% and 62% ranges here. So anything that forms within this area is generally pretty choppy. So you need to be mentally aware that it'll take a while for price to exit this zone. And if I turn the price back on, you can see that in this area the price has been most choppy, and once it leaves this choppy area, when it goes here, the price flows very quickly. Anyway, so coming back to this signal, this was a signal that we were trading. We established our range, which was from this high to this low, and we can clearly see that the order block is sitting well in a good spot. It has a couple of things going on. First, obviously it lies in a good discount area as well. You would have preferred somewhere here, but obviously the price hasn't moved here yet. So this is a good area. This is a decent area. And the second thing I think this order block is going for it is that, as you can see, it has taken out liquidity below these lows and then formed the order block. These are some very potent order blocks, and when you find them, you will see that price literally runs from there. So The things we need to evaluate on higher time frame is technical correctness, which is this is a good order block. Then obviously where are we in the discount or are we in the premium. We don't want to take any buy order blocks or buy fair value gaps in this area. We only want to take buy signals over here. The next thing we need to know is what are the opposing order blocks and opposing areas that we need to exit, we need to be careful about. So here I can very clearly see that here's an order block, opposing order block, which is, so this is equilibrium. We need to find everything that is on the other side of the equilibrium that could prevent our trade. I also see that this is a point of liquidity where price could go and reverse. So these are, I think, some of the two important key points that we need to be aware of, and we'll see how they play out on the lower time frame for us. So what we do is basically bring a vertical line, put it in here, and this will help us to understand how the signal is playing on the lower time frame. So let's switch over to lower time frame. You'll see obviously this is a signal in the past, so it's hindsight now. When I will go to the lower time frame, we'll obviously stop again, replay the price from there. So bear with me for a second. So this was the time when the day had started, when this order block had formed. So when so this is a daily chart, and looking here on this side, on the daily chart side, when this candle would have completed, anything on this side of the chart would have not yet played out, and this is exactly how it would have been visible here, that a new day has just started. So now we are anticipating price will come down, dip into this discount area, and then go forward from here. Alright, so we are going to play this price forward and see how this goes. Playing the price forward. We are looking for a good breakup structure of this area. You can see the price has formed a bearish order block here. We want this order block to be completely broken by closing price. We are waiting for that to happen. Awesome. So we got the breakup structure of the order block of this order block over here, and you can see that very clearly from the line chart that when the day opened here, price dipped down, took out the liquidity from all of these equal lows, and then broke forward. And we can clearly see that there's a break of market structure here. So this is called a bullish breaker. We'll go back to the candlestick chart, set up our zones, and we'll try to trade. We try to take a 2-hour trade into this area. So this is when you receive the signal from Discord, this is going to be the setup where a daily order block would have formed, and on the lower time frame a breaker would have formed. This is what the signal tells you. So when we come in, we do this evaluation that, are we in the discount or are we in the premium? Where are our liquidity targets? What do we want to trade? We evaluate the lower time frame, and then we just let the price play out. So I'm going to zoom in here and let the price play out. Remember, our first target is over here, and the second target is into this bearish order block in the premium. So So this is where our first target was hit over here. You can see we have taken a partial here, and then now we're waiting for price to expand further. And as you can see, without breaking our stop loss, the stop loss would have gone here, entry would have been here. We were able to hit first target and the second target over here. So this is the way to evaluate a setup that we get on Discord. Now, while I show you a successful signal, I also want to show you a signal that does not work, and also the rules that we just defined for ourselves, they can help us understand why would the signal not work. So let's look at this new pair. This pair is EuroCAD, and on EuroCAD we got a signal for a fair value gap over here, this signal. So when this channel completed, it formed a fair value gap over here, and obviously when this fair value gap was supposed to be mitigated, we would have got a signal. Now we start applying the same tactics that we learned previously to understand, is this something that we should be buying or not. So let's switch over to our line chart, and we can clearly see that this is the highest point in the range right now, and this is the lowest point. So let's draw a range. Wow, and you can very clearly see that this fair value gap lies completely in the premium. Remember what we said earlier, we don't want to be buying in premium, we want to only be selling. We want to be sellers here, we only want to be buyers here. So that means we are anticipating that this fair value gap will not work. Let's see how that plays out. Switching over to candlesticks again, and so where would our targets be? If this is the range, then I would anticipate this is an old high that we would like to take out. So this is a good target, and there are no more bearish structures in between this fair value gap and this high. So we would, if we were to take this trade, we would anticipate that price will come in here and then leap back forward here. But we don't want to take this trade, and we want to prove it to ourselves that the system we designed will help us prevent taking this trade. So let's go to this time in so on lower time frame, this is again the 1 hour, when the day would have started, when the fair value gap was formed over here. When the fair value gap this was formed, this is how the day looked like, and our anticipation was that price would come in here and then go back to this old high. Now let's start playing the price forward on lower time frame and see how it plays out. Remember, again, we want the price to come and touch this area and then form a bullish breaker for us to be interested in taking the price forward. We are doing nothing, we are waiting for price to come down, still nothing done. Good, so price has touched our fair value gap. We are anticipating presence of buyers here, but the problem, remember, is that this fair value gap is in premium. So you can see that there was a bullish breaker created here that we would like to trade, though we don't want to trade the entire signal itself because we know that the signal is in premium of the range. So anyways, we set up our risk reward. and we see how the price plays out. When the price is in, and you can see we were taken out of our trade over here. When the price is in the premium, the sell pressure is much higher than the buy pressure in that area. Hence, it is extremely important that we don't take buy signals in premium and we don't take sell signals in discount. And as you can see, just showing how this played out on the higher time frame as well, price came down and then couldn't go anywhere. So it was very important for us to realize that there was a very specific reason that we did not take this trade, which was this whole fair value gap was formed in premium of this range. So I hope with these two examples it is now much easier and clearer for you to understand how to validate the signals, how to ignore some of the signals. I practically only end up taking 2 or 3 signals out of everything that comes on Discord, and this is how I discard most of the signals. Eventually we'll make the Discord signal system better, where it automatically understands how all of the learnings that I'm sharing here are put into the signal itself. But till then, you should not be taking all the signals that are available on Discord. You need to ignore and disregard most of the signals based on this type of analysis. I hope this was helpful. Take care.